how cold is not enough.
Hey guys, I apologize that my voice might still be a little bit subpar to what it normally is. I know it's a little high pitched, but I sound a little sick still. But anyways, what we're going to talk about today is just kind of broad informations and a little thing to help you understand why we use them. And as stated in my first strat video called the Strat A to Z, the broad information is the only true pattern that has any significance, and that's because it's given to us by the outside bar. And what that means is that in order for price to move up and down, you're going to notice it has to create compound outside bars. And all that means, again, is that it makes higher highs and lower lows. And you're going to see this stuff right here from here. We can actually go like this. So from all the way up here to all the way down here, you're going to notice this is all a compound outside bar of all this stuff here, right? And that's what creates your higher highs and lower lows. And you're going to see starting to bounce off of it. Sometimes it happens, sometimes it doesn't. Anyways, you're going to see it happens again. Creates higher highs and lower lows. We didn't go and take out this yet, but if we were to draw this, it'd be something like that. You're going to notice this is all compound outside bar of all this stuff here. And that's all that broad information is saying. So now, why do we use the broad informations? And what's a good example? So now we can look at this, and you're going to see here's your 3-2 down week, and you're going to see that means these two bars right here came and went outside bar of these two, because you get this higher high and you get this lower low. So that gives you your broadening information, right? And now if we were to just go down, you can see this took out all this stuff here. So again, the easiest way to draw it is you draw from right to left. So what did this high take out? It took out all this stuff. So you can draw it like this if you want, right? And what did the low take out? This low right here took out anything that had a higher low than it. So we can go like this all the way down, and you're going to see we have slightly lower low to all this stuff. So all this right here is a compound outside bar of all this stuff. You might be like, okay, well, why does that matter? It's because this shows us the outside bars on higher time frames, or time frames we're unable to see. And what that means is that a computer is going to show you what it wants to show you. And what that means is that if this daily chart, since we're on a daily chart, this opens at the start of the day and it closes at the end of the day, right? So that is going to be a daily chart. If this chart opened in the middle of the day and then closed the next day in the middle of the day, that would still be an 8-hour trading day, and it would still give you equal daily candles, right? But that chart would look completely different. So now knowing that, we then know we can go and look at other time frames. So sometimes you'll see me using a 2-day chart or something, and it's because this is still a valid chart. Each candle is just 2 days, right? And you're going to see you get hammers, you get outside bar reversals, compound outside bar. This would be 2-2 reversal on the day. And you can see how that starts to give you your magnitudes and stuff, right? So now knowing that we can use those higher time frames, that's what these broad informations are giving us. It's just giving us time frames we can't see. It's going to give us those compound outside bars. And this is a great example, and why I wanted to make the video, because you might be like, okay, that's completely, this is just completely subjective. It's stupid, whatever, blah, blah, blah. Now, if you pull up the 2-week chart, you're going to see this. This is your outside bar, and that we know by definition is a broadening formation. And then this is the new week. You go 2 down and red, and then we know when that goes green, it's trying to come back through the previous range, because you get the time continuity change and all that. So now we know when we start coming back through, we're coming back through this outside bar right here. So hopefully you can see how that works. And if we were to go on another example, we can go to Chewy. You're going to see this if we go on the weekly chart right here. So we get outside bar, outside bar, outside bar. And if we go to a lower time frame, again, people call this subjective and everything, when it completely is not. So here, you're going to see this is compound outside bar of all this stuff in here. And you're going to see these 3 bars are compound outside bar of all this stuff. And you're going to see these 3 bars are compound outside bar of these bars right here. So you can see how that range broadens and broadens and broadens. And eventually it picks a direction. We don't expect it to go 3, 3, 3, 3 every single time. But we know that's how price action is going to work, right? So again, if we just pull up the weekly chart, you get 3333, and that is how we gauge our magnitude. Since we know that occurs, if you were to go on a lower time frame, you're going to see you can trade these reversals up and down. And we took this one, this was a short from right here, and then we took it as a long last week off of a hammer day over this off the bottom of the broadening formation. And then some people even took it this week as a long when this was 2 down in green, because we knew we were coming back through that previous range. And you can see how that continues growing. Now, let's go to one more example. You're going to see Roku. So everyone's talking about Roku all of last week because it's like, holy shit, look at this gigantic day. It's like, well, what did it do? It's like, okay, people think this is a flag or a wedge or whatever you'd want to call it, but we know that those formations have no bearing on future price action. The only thing that's going to occur is broadening formations, right? And you're going to see these bars all right here are compound outside bar of all these bars, right? So this was our entry in the Discord on the 2-day chart, because you're going to see we get 2-2 reversal hammer candle, and then boom, right back through all these previous pivots, and these 3 outside of all this. Now if we pull up a weekly chart, what do we have? We have outside bar, 2 down in green, boom, goes outside bar. And if we were to pull up a 2-week chart, you're going to see this is a RevStrat 1-3. So now, knowing that this occurs, we know how to gauge our magnitude, because we know when we start coming back through, we're trying to take out all this previous range and go compound outside bar of the previous bars. And you might be like, okay, well, Alex, this is a higher low right here, and this didn't take out this. It's like, okay, well, we know that price does not have to take out every single side of the range. We just know it does take out both sides of a range. So if you were to be drawing it on this would have been obviously how you would have drawn it. These bars right here are outside of these bars here, right? And now this one comes down. It doesn't take out that low, but what it does do is if we draw from right to left, because we use all of the data possible, it takes out all of this stuff, and this would be your outside bar. And if you were to draw the top, you can leave it drawn like this, or you can draw from right to left and take in something like that. You're going to see this is all outside of all this stuff. So you might be like, okay, well, that's just a catch-all, the strat, that's just so stupid, whatever. And it's like, okay, well, you can believe that. But since we know this happens, just because it didn't come and take out this really obvious pivot, it still took out this obvious pivot, right? So knowing that, we know to be looking for failures of previous ranges and failures of one side of the range to come back through. And you're going to notice if you were to just draw out your obvious pivots, we can go to a daily chart. You're going to see exactly what we're looking at. So if we just remove all these drawings, you're going to see if you were to mark out your pivots, you're going to see this was your obvious swing low. And then you have more pivots here. You have another swing low here. You have another one here, etc., etc. And we take out all that stuff. And all this tells you again is that we took out this, and this is higher than all this stuff. So this is compound outside bar. These 3 bars are outside of this stuff in here. So these 3 are outside of this right here. So now when we get a daily reversal back through, we know we're trying to come and take out this stuff. So here, this is going to be your hammer reversal entry over 346.12, and your magnitudes to come up here for that reversal. And then we know we have compound outside bar on a higher time frame. If we go to a different time frame, you could possibly see that. You're going to see this. These 2 bars are outside of these 2. So that means if we go to a 4-day chart, which hopefully this doesn't confuse you guys, but 4-day chart, we add that to our time frame. We go like this, and you're going to see if we clear these drawings now, this is a higher time frame compound outside bar. This is outside of this bar. So that's a 3, and that's your hammer candle on the 4-day chart, and then boom, that's your actionable signal 3-2, right? So hopefully these time frames and stuff are kind of showing you what we're actually looking at when we draw this broadening formation, because a lot of people seem to forget that. And I think that this is going to be something that helps a lot of people. So if this helped you, please throw a like on the video, and I thank you for watching, and I hope to see you in the next one.